Back live tonight on In Focus. The South African Reserve Bank's Monetary Policy Committee has raised the cost of borrowing by 50 basis points in the hope of bringing down inflation. This latest move brings now the repo rate to 7.75% since November 2021. The Reserve Bank has lifted rates by a cumulative 425 basis points after it slashed the repo rate to 3.5% in the wake of the COVID-19 pandemic. The repurchase rate is now 125 basis points higher than it was prior to the pandemic. For more on this, we're now joined by Dr. Adrian Saville, an investment specialist at Genera Capital. Dr. Saville, good to have you, and thank you very much for your time and coming on tonight on In Focus. Our prime lending rate, 11.25%. Others saying it's the highest since 2009. Certainly bad news for anyone, I believe, who has a bond of 2 million rands. Right now, they're at least paying a good, what is it, 5,000 rands more since the first interest rate hike started. That is if they bought their house when the interest was sitting at 3.5%. Is it all bad news?
The cost of borrowing translates into a substantial increase in the cost of living for anyone who's carrying debt. And as you point out, during the pandemic period, interest rates were at record lows to actually encourage borrowing, or perhaps that's overstating it, initially designed not to encourage borrowing, but to ease the cost of living. And at that point, you might remember inflation rates fell, all the way into very low single digit. And with inflation rates at such low levels, we could justify very low interest rates. And at the same time, those low interest rates took a lot of burden off people sitting with debt on their personal balance sheets, and companies sitting with debt on their balance sheets. Things have changed. And we've moved into an environment in which inflation rates, not just in South Africa, but indeed globally, have remained stubbornly high. And South Africa hasn't been the only place to hike. The Fed, not leading the charge, but the Fed, the most important in the charge, has one of the biggest interest rate hikes, or the sharpest interest rate hikes that we have on record. So we're not alone in this pain that we're feeling, but it is without question, difficult for the economy, businesses, and households to digest. And as you rightly point out, is there any silver lining to it? And the idea is that this interest rate discipline, this monetary policy discipline, will prevent the persistence of inflation and take us into a lower inflationary environment.
So you already mentioned, the Fed having been the first to lead, so we saw interest rates rising everywhere else in the world, to say, well, the Reserve Bank really had no choice but to lift our interest rates. Otherwise, we would have import inflation. But did they have to go 50 basis points? Did they have no choice there?
Well, just to clarify the earlier point, the Fed wasn't the first to hike, and amongst emerging market central banks, the SARB was actually one of the first to hike and has been one of the most consistent and the most disciplined. So this is a continuation of the theme. My reference to the Fed is that whilst they haven't been the biggest hikers or the first hikers, they are without question the most important hikers. That's the one to watch. Returning to the Reserve Bank, the South African Reserve Bank, as you point out, did they have to hike 50? This was ahead of expectation. The consensus was that they would hike by 25, or a 0.25%, and then perhaps another 0.25% at the next meeting in May. As it stands, the language in the delivery of the announcement is significantly more hawkish, conservative, worried about the level of the rand weakness, inflation that's in the system, and they have hiked their forecast for inflation for all of 2023 by about 0.5%. And so this has motivated them, not a judgment or a decision without dissenters, so it was a 3-2 decision, a split decision, but on balance the majority decision to hike by 50 against the backdrop of the weaker rand and the inflation rate, which is just proving to be stubborn, and the weak rand perversely actually feeds through to the inflation remaining stubborn. So the 50 was more than we anticipated. As we go to bed, the bond market is suggesting there is still another 25 basis points or 0.25% to come in May.
So, I mean, when we look at this particular remedy, it's a tough pill to swallow. It's a bitter pill to swallow. If this inflation was consumption-driven, we would understand that and say, well, it will lead to households being a little bit more cautious and not spending as much, not borrowing as much, and maybe that would drop the inflation. But it's not consumption-led. It's by and large led by factors that are outside of our control. It's weak economic growth that has got to do with politicians fighting each other and not doing what they're supposed to do, wars in Ukraine and so on and so forth. How does raising the inflation assist us? I mean, the interest rate, I beg your pardon.
Yeah, and that's a conversation you and I have had on a couple of occasions. A big complaint to bring, with regard to monetary policy is that you're raising interest rates to deal with inflation, as you point out, that is not caused by the demand side. And what we mean by that in economic language when we talk about the demand side is it would imply that inflation is being caused by people buying things, by our consumer behavior, by our spending behavior. Whereas the evidence suggests that overwhelmingly inflation is being explained by supply-side factors, and supply-side factors are things like wage inflation, energy inflation, and in South Africa that's electricity, not just fuel, food price inflation, which has been stubbornly high, and then inflation that we import through a weak rand, the weak rand multiplied by dollar prices or international prices in and of itself causes inflation. And there is a big argument to be made that these are all supply-side factors and that moving interest rates around isn't going to change your inflation number. I'm very sympathetic to that view. In the same breath, what the discipline and the robustness of the Reserve Bank's policy demonstrates is that we have sound money and sound monetary policy, and that's a big signaling mechanism to keep the rand stable in what has been a very, very fragile and vulnerable environment. So it's as much about management of things in the rearview mirror as it is about signaling of things that we should be perhaps worried about or concerned about. And there is a very, very clear signal being sent by the Reserve Bank that we can expect them to remain disciplined and to hold the line. That's a powerful policy factor when it comes to thinking about the prospects for inflation and the prospects for the rand. They are both positive for inflation and the rand, notwithstanding the pain that we feel because of the interest rate hike.
So, I mean, as you put it, the Reserve Bank starting a little bit earlier and remaining and being consistent in terms of the hikes. But we have not seen, I suppose, as much of a move in the inflation in the downward direction that we would, I suppose, like to see. Is this an indication that this particular rate of inflation is going to stay at this particular level, at least for a longer period?
Well, what's happened with today's announcement is the SARB has raised their forecast for inflation, so they're anticipating inflation to stay higher for longer. That's not good news. So there's almost a double negative in there. Not only are you going to have to pay higher interest rates on your debt, but you're also going to have to pay higher prices for everything else. That's the pain of inflation. And they're only pointing to inflation really moderating much later in 2024. A lot of the explanation for this elevated inflation sits in things, as you pointed out, that are outside of the influence of interest rates, including food prices, which are highly sensitive to external factors, and imported inflation, which is pulled through by the rand, which went weaker. And that rand weakness is largely explained by things outside of the control of South African policymakers. So unfortunately, this is a little bit like pushing on a piece of string. However, as much as it might feel painful or even futile in the very near run, it is such a clear signaler that the Reserve Bank is independent and that the Reserve Bank is going to remain disciplined and steadfast. Those are very, very powerful signals for us setting inflation expectations. If the Reserve Bank were to change their stance and essentially capitulate and say, well, we give up here, we're going to drop interest rates to provide some economic relief, I think if anything you would see a double negative, and the first negative would be the rand would fall out of bed, showing that the Reserve Bank had capitulated, and the second is that you would agitate consumer spending, and then you would have demand side inflation. So this is perhaps a case of better the devil you know.
So is that why investors seem to have responded positively, at least the markets seem to have responded positively to this announcement? We saw even the rand at some point dropping down below the 18 rand mark. It's almost there now. I don't know what the latest is. But also we saw a run for the South African bonds.
Absolutely. That firm-handed approach by the Monetary Policy Committee is a clear indication that we can expect disciplined and robust policy to come from the South African Reserve Bank's MPC. And that is a very positive signaler for South African government bonds and for the rand. And based on that, exactly as you point out, we see the rand moving sub-18 today from 18 rand territory just a few days back. We're talking about 1850 type territory. We get into the high 17 rand territory through the course of today after the MPC announcement, and South African government bonds go firmer. Both good signalers that better things are to come. Perhaps not the brightest given South Africa's structural constraints, but all else equal, this is a very positive policy signaler in the context of South Africa's circumstances.
Dr. Adrian Saville, appreciate your time. Thanks so much for coming on tonight. He's an investment specialist at Genera Capital there.